Morning traders, welcome out to your market roundup for November 1st, 2022. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan. Let's discuss the markets here a bit. You can see the markets kind of started the day on their highs and finished pretty much near the lows. So not great price action, but I would take that with a little bit of grain of salt in that the markets were really waiting for the Fed meeting tomorrow. So it was kind of, we had rebounded a little bit on Friday. We're just kind of filling a little bit of Friday's move as we go into the Fed meeting. Not super surprised by that. I would have expected some choppy kind of sideways action into Wednesday's Fed event. As we look at gold and oil, the commodities are spiking a little bit more. So it was more a day of commodities going up versus everything else kind of starting on their highs and being sold off throughout the session. Advancers versus decliners, it was still 60% of stocks going up, even though we finished down in the S&P and the NASDAQ. And interestingly enough, we're now, as far as the 50-day moving average is concerned, basically at equilibrium. And that, I think, is the market environment we're in for now, which is kind of this sideways price action. Most of the past week or two has not really done much, not really gone anywhere. And as far as the NASDAQ specifically, the S&P a little bit higher for the past couple of weeks, but it's a little bit more of a sideways market environment and more of a bifurcated market, as they call it. Some stocks up, some stocks down, but really just a tug of war. On the daily news, job openings beat expectations. Now, that tells you that corporations are looking to fill positions, and I think it's 1.9 jobs for every employee, every person that's looking. It kind of tells you that corporate America is still strong and they're still trying to fill voids. However, this is not kind of great for inflation. This kind of speaks to the fact that there's still economic demand and we're not really slowing in significant fashion just yet. Attention now turns to the Fed, and they're expected to raise rates by 75 basis points. There have been some rumors circulating that maybe, just maybe, they'll only hike by 50 basis points. And Morgan Stanley put out a piece that said if they only go by 50 basis points, the market could rally 10% in a single day. I don't see that as very likely at all, even if they only hike by 50 basis points. But would I expect a few percent, 2-3% rally in the markets? If that happens tomorrow, yeah, I could see that. S&P, again, we're kind of in this choppy period. We're basically around the same levels that we've been at for the past few months. If you look at where we were when we first hit this low in May, that's kind of been the area we've gravitated around. We spent some choppy sideways price action there. We accelerated up. We came and blasted through that to the downside, but notice how we just kind of keep checking back to that 380 level. Well, we're above it now. Might we kind of pull back to it and try to use it as support or something like that? It's possible. Even if we accelerate away, I just don't think it's up and away. I suspect we would come back towards that zone. So the overall long-term chart is one of lower highs and lower lows. This low was lower than the ones that preceded it, which means we're in a bear market environment, right? This low is lower than the one before. What comes next is likely a lower high somewhere in here. Now, it's possible the bear market is done, it's finished, that's all we see, and stocks skyrocket from here. I am not in that camp. I would suspect that we're still probably going to see some further declines in the market. So I think the next thing that comes is a lower high somewhere in here for the S&P, and that we proceed to trade down and make lower lows at some point, maybe early 2023, something like that. The QQQ, the NASDAQ, this is really where there's been more pain recently. Out of the mega cap tech stocks, you think about it, Google was down big, Microsoft missed, Amazon was down big, Meta, formerly known as Facebook, down massively. There was one that held up well, and that was Apple. And other than that, everything else kind of crumbled on earnings. Even on a day like today where not much was happening, the NASDAQ really traded poorly, and it traded poorly for two main reasons. And here it is: Google and Amazon. Big downward moves, bright red. That's where people were selling today. As far as green, you're getting a little bit more green in energy over here, a little bit more green in biotech, which had a decent day, and financials continue to trade relatively okay. But overall, I'd say it's a mixed bag, with the exception, really the obvious thing today was large cap tech, just taking it on the chin. So as we come into our outlook, we've gone more neutral overall. I touched on this certainly in the last couple of market roundups that I've done, that we're in a corrective phase. We're in kind of, the ABC style correction after this big downturn. And that correction, again, is likely to stall out and make a longer term lower high. I don't know exactly where, but I'll trust that I kind of know it when I see it. Could it be on the Fed meeting? Sure. I kind of think that maybe it's a few days later than that we kind of stall out. And frankly, I kind of expect some choppy sideways price action that then evolves into a little bit more downward turn later this year or early next year. As we look at the markets, a couple of ideas on the bull and the bear list. Our list last week performed pretty well. I've removed a couple, I was highlighting AMC and some of those theme stocks. If you've been shorting Bed Bath & Beyond, AMC, even GameStop, which has held up okay compared to those others, I've had AMC in here. I'm not saying that we don't still like those as bearish trades. It's just time to highlight something else. So MGM on the bull list. Now we can see that we're at some resistance here. This has been a key level if you just kind of take your line across here, and we tried to kind of push above it today. I sort of suspect that we won't go just yet. We've already expended a lot of energy just to get back to this resistance. I would love to see this back and fill, maybe back towards 34, and it's a little cup and handle type of idea that could be in play. But on a pullback, I think I'll look to certainly be a buyer at these levels. I'm not real interested to try and play this on a breakout. Now, if you want something that's a little more ready, these next two more fit the bill. So NUE, Nucor, little pullback. You can see the cross, the 20 crossing above the 50, and this is your pullback after that bullish crossover. I suspect we're going up here to the mid 140s. So from 135 to 145 is kind of a 10-point upside move, and I think that's the next stop, and then we could break out to the upside from there. Next on the list is Target. Target's been in this big gap down, and it's just gone absolutely sideways since then. But one thing I kind of like about it recently is just maybe we're still stuck in this range, but it's a low risk scenario that we can go back up towards 180. Today we kind of hammered off the bottom a little bit. So if this starts to pivot and turn to the upside, I think you can play this from this kind of 165 area towards 180. That's what I would anticipate, even though I'm still very cognizant of the fact that that wouldn't be a runaway trend or anything. I kind of expect that this is in a trading range, and the next stop is to go up and test the upper end of the range, kind of create this effect in the chart. So I'm targeting target towards 180. On the bearish side, FedEx can't get out of its own way, and here we have a bearish engulfing pattern. That's one of my favorites. Notice that when you see these patterns, at least in the very short term for a couple of days, you normally trade lower. Here's a bearish engulfing scenario, and we trade down for a couple of days. At minimum, this should drop for a couple of days. Here's kind of a bearish engulfing. You trade down. Let's see if there's any others that we can kind of highlight. But anyway, as you kind of see these, you can get that downward price action expectation. So in the case of FedEx, you almost have kind of an ascending triangle, but it's down at the lows. And these, whether you call it kind of a pennant formation or just a consolidation pattern, because we came from the downside, the expectation and the probability is that we'll leave on the downside. And today's price action rolling over like that gives us an interesting look. Maybe my favorite chart of them all, square. Square, bearish engulfing. In fact, today's bearish candle engulfs about 3 prior days price action. So some real selling coming in right at the 50 period moving average. And I think we're headed back down towards 50 and lower. Square, I think, is my favorite potential trade idea of them all. So I really like the setup, the risk reward probability on that one. And then last, just my expectation for the US dollar. US dollar has broken down here and has a little retracement. Now the US dollar does spend a lot of time going sideways. I wouldn't trade, I'd probably use like bear call spreads, trade little wimpy, 29.50, 30, 30, 31 type bear call spreads. It'd be kind of wimpy, but I wanted to highlight this because not only do I think that this is going to make another leg to the downside. So if you sold the 29 call, you go short that call and you buy the 30 call, something like that. It's not a super exciting, but I wanted to show this because it speaks to my outlook for commodities, which I anticipate go the other direction. The one commodity that I'm least likely to buy is actually energy, which has been the very best. Energy is just so long in the tooth. My system, my approach is not really to chase any further. If it's going to keep going up, it'll do so without me at this point. But the other commodities, notice that I highlighted NUE. If you think of steel, copper, aluminum, silver was up today, back above some short-term moving averages and so forth. So I'm thinking of the other commodities. You could even go to the agricultural space if you were thinking about I don't know what their charts look like, but Archer Daniels, Midland, Mosaic, those types of plays. So whether it's steel, whether it's copper, like a Freeport McMoran, just anything in that commodity complex that plays off of a lower dollar and kind of takes advantage of that and has some sort of upward trending chart or bottoming out process or something that's recognizable, that's where I think I can hunt. So my favorite ideas, again, for today are really short dollar, long these, and then just for my company specific, I like Square's setup. Technically speaking, that's a Bitcoin. That's kind of a crypto bearish play. Square is often, I think they actually go by the name of Block now, blockchain. But whether you call them Square or blockchain, all these companies that are changing their names, as soon as they've done that, they've kind of collapsed. It happened to Meta and Facebook as well. But that one looks really nice for a downside trade just on its own merits. Now, market outlook, I still think we're in a bear market. What should happen next is a major lower pivot high, right? We established lower lows on the recent decline a few weeks back. We're probably somewhere in the near future, in the next week or so, going to establish that lower high and start to trade choppily but lower. Overall, the next big move I'm expecting would more likely be down than up. Although tomorrow could certainly be, kind of an exclamation point on the end of this rally. Could we be up 2 or 3% tomorrow on the Fed meeting? Sure, without a doubt. Non-farm payrolls come out on Friday, and those are your two major events. On the earnings front, still a lot of companies to report. Amgen and ConocoPhillips, CVS, Humana, PayPal, Starbucks, Toyota, and others. So plenty of things to keep you busy. I hope you enjoyed the market roundup today. Have a great rest of your day, and we will see you next time. Goodbye, everyone.